Net lending to individuals, January, refers to the total amount of new credit extended to individuals, households, by financial institutions during the month of January, minus any repayments made during the same period. This metric includes both mortgage lending, secured lending, and consumer credit, unsecured lending such as personal loans and credit cards. It is a key indicator of borrowing trends and provides insights into consumer confidence, spending behavior, and the overall health of the economy. The net flow of credit to individuals in January is calculated as net lending equals new credit issued minus repayments. It includes mortgage lending, which refers to loans for home purchases or remortgages, and consumer credit, which encompasses unsecured borrowing, such as credit cards, personal loans, and car finance. Higher net lending indicates increased borrowing, which can fuel consumer spending and economic growth. However, rising net lending can lead to higher household debt, posing risks to financial stability. Increased borrowing often reflects optimism about future income and economic conditions. Factors influencing net lending include interest rates, where lower rates make borrowing cheaper and encourage net lending. Economic conditions, where strong growth and low unemployment can boost borrowing. The regulatory environment, where tighter lending standards can restrict net lending. And consumer confidence, as optimistic consumers are more likely to take on debt. Net lending data is typically released monthly by central banks or financial regulators, such as the Bank of England in the UK, and is often included in broader reports on money and credit. For example, if net lending to individuals was $5 billion in January, it means individuals borrowed $5 billion more than they repaid during the month. A decline to $3 billion might indicate weaker borrowing activity or increased repayments. Increased borrowing can drive consumer spending, which accounts for a significant portion of GDP. Central banks use this data to assess household debt levels and guide interest rate decisions. Rapid growth in net lending can signal risks to financial stability if debt levels become unsustainable. Rising net lending often correlates with higher retail sales. Central banks may adjust rates to curb excessive borrowing or stimulate spending. High levels of net lending can increase household debt, affecting long-term financial health. If the Bank of England reports $6 billion in net lending to individuals for January, it means individuals borrowed $6 billion more than they repaid during the month. A year-on-year comparison can show trends. For example, if January 2023 saw $5 billion in net lending, a rise to $6 billion in January 2024 indicates a 20% increase.